Hello everyone, welcome to the 21st episode of Your Money, Your Taxes. I'm Lalit Abichandani CPA and owner of ABIC CPA Associates. Our episode today is about financial planning and especially savings, and Paresh will be educating us about this topic. Paresh Shah is the CEO of Paresh Shah Financial Services. He's a certified financial planner and a wealth strategist for the past 17 years, helping individuals and businesses co-create innovative financial strategies. He's a licensed CPA presenter, educating CPAs like me as they guide their clients on investments, life, disability, long-term insurance. He specializes in pension and profit sharing plan, asset protection, estate planning, and business succession planning. Paresh ji graduated as a chemical engineer from a prestigious IIT at Kharagpur, India, and he is also a proud winner of 2016 Honorary of Long Island Business News Leaders in Diversity Awards. Paresh ji resides in town of Hicksville in Long Island with his wife Shimal, and their son Shamik is a sophomore at Stony Brook University in New York. Paresh ji, welcome.
Thank you, Lalitji. Thank you for this great introduction. Really appreciate it.
So Paresh ji, until now we have been speaking about protection and all different kind of insurance strategies within that. Let's move discussion on savings, because in this country I see there is really shortage of savings within my clients and within community in general. So let's talk about savings and how we can take care of that or promote that.
Well, I'd like to say, Lalitji, I'd like to start by saying that traditional financial planning has failed Americans. And what is essentially traditional financial planning? Traditional financial planning, and we spoke about this earlier. Traditional financial planning means you gather assets, you assume a certain rate of return, and you believe that you will have adequate capital that will throw off income which will be enough for you to live in retirement. Now, the problem started somewhere in the early 80s and 90s. Various businesses which hired employees stopped their defined benefit plans and moved to 401k plans. So employees were themselves responsible for their own retirement. People had savings which they were put into these retirement accounts, and because of the stock market growth of the 80s and the 90s, these accounts were doing phenomenally well. So when these accounts started doing so well, people started assuming, that means a lot of people would say that I have X dollars in my account today, and assuming 10, 12, 14% rate of return. By the time I retire, it will grow to a very large pool of money. And that pool of money will give me sufficient income in retirement. So I do not need to save that much anymore, and they stopped contribute, or they started contributing less to their retirement account. Now in the process, their lifestyle also went up. Seeing all these large pots of money in retirement account, they started spending more money. Then came the twin crashes of 2000 and 2007. Now, Lalitji, you know that when somebody starts spending money and their lifestyle goes up, it's very difficult for you to curtail back or cut back. So when the accounts went down, they could not really start increasing their savings rate. This has created the problem. That means the account values came down, the savings rate did not go up, it remained at the lower threshold, and therefore the retirement savings and the overall savings have really suffered. I mean, there's this Dr. Robert Morton, who in Harvard Business Review wrote an article, the retirement crisis is happening in the US just now, and he published that in July, August of 2014. He mentions a lot of these things. I mean, it is shocking for sometimes to understand that the average savings that an American has going into retirement today is about $50,000, and that does not even take care of 1 year's expenses. So financial planning has given people a problem, and it all begins with savings, Lalitji.
Absolutely, Paresh, I've seen that, and I know for a fact that the social security that you are going to get in your retirement will not be enough. And as you said, this $50,000 is a meager sum, and it's very difficult to carry on with that small an amount. But when you talk about these savings, are you really talking about investment, Paresh?
So, most people, when we refer to savings, talk about that how did I invest the money or how did I put the money away? Well, as a financial planner, when we talk about savings, we are essentially talking about the process of you getting income and from that income making expenses, and whatever remains that goes into savings. Plus also we are also talking about your immediate needs, that means contingency money needed in the next few months, also money needed for short term needs. All those things come under the umbrella of savings, Lalit.
But are you really talking about budgeting, which I have seen in my experience that very few people do budgeting? So give us a little bit more guidelines into how people can go into savings. Yes.
Thank you, Lalit. You're very correct. Few people do budgeting, and actually, we find that budgeting is just a part of the savings exercise. Let's begin with what happens. Let's go back to our original concept of human life value. And when we're talking about human life value, we're talking about everyday people going out and exchanging work or service or knowledge, advice, whatever you want to call it, in exchange for currency. Now, once that currency comes into the hands of the person, there are four ways in which that currency can be deployed. First is you buy protection. That means various insurances you buy, auto, homeowners, and we talked quite a bit about all the various protection elements. So the first bucket that the money would go into is protection. Then we would talk about savings and investment. The third would be liabilities, paying liabilities. That would include the taxes that you pay, income taxes, state, federal, city, which you handle for any person. And then after that, finally, what's left is spent as lifestyle expenses. So if you're looking at these four buckets, you can easily see that the only bucket which helps people for the future is the savings and investments bucket. And so if we're talking about the savings and investment bucket, that's where focus or energy should be given during budgeting. And it's not really paid attention to, Lalit. That's the problem out there.
I understand that, Paresh, you and I, we are in financial business, so we understand money and we can handle it. But a lot of people don't understand this budgeting and savings, and savings to them, whatever is left is savings. But that should not be. There should be a focus towards savings. Please tell us how that can be improved. How can the savings be improved?
Well, if you look at it mathematically, Lalit, is very simple. Input minus output is equal to savings. So if you either increase the input, that means you increase income, or you reduce expenses, then you can save more. Now, it sounds very simple, but it's not really that easy.
It really is not. It really is not. So the question is, why is it not done? Because A, people don't understand. B, people don't put focus into that. So
yeah. Let's start with the basic philosophy of savings. How do families really save? First, when money comes into the system, we take care of all the various expenses that are there out there. So you would spend money on your eating and your groceries and all the different things. Then you would be worried about paying off your liabilities and paying off your taxes and your mortgage, etc. You'd pay off some of the necessary premiums like auto, homeowners, etc. And then finally what's left you put towards savings. In place of that, what needs to happen for any family is to have a targeted savings. That means that we must just decide well in advance that this is the amount of money that I need to put away for my retirement. So if you are getting in $100 and you decide that you want to put away $15, you first save the $15. Then after that, you protect yourself, you buy adequate protection. And then after that, in the third stage, you pay off all your liabilities and taxes, and then what's left now you use for expenses. Well, this may not work perfectly, because what happens is there are basic expenses that need to be taken care of and that prevent a family from doing savings. So let's say, for example, there are some child care expenses, there are some health care expenses, there are some maintenance expenses which are necessary, and that prevents a family from doing the necessary savings that they want to do. That's fine. What you can do is you start off with saving whatever you can, but then every time there's an increase in income, you keep your expenses flat. You do not get into the race of keeping up with the Joneses, and then after that, whatever is, you start increasing. So every bit of increase that you have, you can allocate towards savings, and that will help you reach your savings target. So I feel that is one approach to helping to starting to save better.
Pareshji, we really need a navigator here, and you are a financial planner. We need a little more navigation into this. Give us some more ideas as to, without sacrificing their life, obviously there is going to be some sacrifice, but without sacrificing their necessities, how can people motivate themselves for savings?
Lalit, you said it very correctly. In fact, that is probably one of the single biggest reasons that people do not approach their budgeting and their savings. It's because they believe that the moment they start going into that area of their lives, they'll have to start sacrificing. I like to relate this to equivalent like being, becoming fit or losing weight. The reason why people will not sit with a dietitian or with a fitness coach is because they believe that the moment they sit there, their inadequacies will come to the surface, and then they would have to give up eating some of the things that they really love, or they would have to dedicate time to an exercise or a fitness regime. And in that fitness regime, what will happen is that they will have to take out time from what they really enjoy, maybe like something like watching TV or things like that. So what really happens in the exercise is that that's why you don't go to a coach or to a dietitian to sit down with a nutritionist expert. So along the same lines, once you sit down with that expert, you will find different creative ways. You might find some tasty food which you enjoy, but which is healthier. In the same way, when we sit down with a person, first we examine what is their current position, where do they stand. Then we find the areas of leakages. That means we find places where, say for example, keeping their lifestyle the same. Let's say if we want to increase, let's say we find a way in which we reduce their taxes, or we help them to reduce their liabilities. So with both of those things happening, we are able to create a plan for the future and then also help them save when their incomes go up. Lalitji, we are happy to offer this as a free exercise, a 30-minute review for anybody who's watching this show, a free review of their finances to help them budget and save better.
I absolutely agree with you. Like I said, we do need navigators sitting side by side to reach these goals and how to attain that. I do have a lot of questions in this area, so let's set aside some time in future and pick it up from where we left so that we can guide our viewers accordingly. Thank you again, Pareshji, for wealth of information. It was a lot of good information. All we need is a motivation and some help, and I'm sure you can provide that. So
thank you,
with
Lalit.
that, thanks very much for coming in and helping us out. Thank you.
Thank you, Lalitji. Always willing to help.